Hi, everyone, and welcome to this week's edition of Mish's Market Minute with Mish Schneider. Today, we are really excited to be able to introduce to you the first of the ACP plugins, Real Motion, and it'll be a tutorial that Keith will take you through. So he's going to go through the nuts and bolts of that indicator with Market Leadership tutorial coming to you next Friday, November 27th. So here we are. Take it away, Keith.
Thank you, Mish, for that. So today's session is all going to be about our real motion indicator and the great plugin and functionality that we get on StockCharts. Of course, before we get started, I have to say this stuff is all for educational purposes, yada, yada, yada. Please read the disclaimer here and let's get going. Okay, so first thing, our real motion indicator really provides a deeper look into price action. And it's really what I would consider a professional approach to understanding market activity. And what it's going to allow you to do is spot critical inflection points earlier than the crowd. And it's also using conventional trading analysis techniques combined with this indicator. So here's why it works. Well, for one, it works because momentum, it's a way to measure momentum. And the real motion indicators detect trends before the crowd. And it's excellent for spotting leadership, and it also finds divergences that lead to important price reversals. Now, the other thing is real motion indicators find compression when pure price can't or it's not obvious. The other thing is it's also fantastic at finding mean reversions. So we're looking for specific conditions and we're not trying to predict every move with this indicator. So, classic approach to trading is often buying and selling at a moving average. An improved approach using real motion analysis allows you to look at traditional moving averages as a baseline. And often, actual moving averages are not respected, but the movement around it is even more important. So, we also use real motion for early detection of breakouts well before the crossovers. And of course, as I mentioned before, we can find mean reversion trades using the real motion for overbought and oversold conditions. It's actually really a very flexible indicator. So here's the thing. You want to spot big trends early, and longer term charts. And when I say longer term, even looking at a daily chart with the right settings, we would consider longer term. But you can apply this to weekly and monthly data to identify critical inflection points before the major trend change. And let's face it, the big money needs to watch longer term trends in order to move huge amounts of capital. Hence, large movements occur when these trends emerge. So let's take a look at how we're building the workspace and the indicator. So first of all, what we're doing is we're using a moving average of price plotted as a zero line. And we call that the baseline. So if you look at the chart here below, this is a chart from StockCharts using the indicator. It's the real motion, and this is that first bullet point, this black line here. That's the baseline. That's the constant of a moving average. Right now, the real motion ratio is the current price divided by the average of price. That's the scatter plot. That's the actual real motion calculated every time period. Now, in this case, it's on a daily chart, and so the real motion, that brownish or reddish dots, that is that actual ratio. Now, what we also do is we have a fast real motion moving average. So that is a short-term average of the ratio. In this particular chart, it's the 50-day moving average of what that real motion indicator is doing over the last 50 days. Then we have a slow average, right? And that on the daily chart, in this particular case, we have set at 200 days. So you're getting, in essence, a setup much like what we use in actual just regular price charts. So what we like to do is compare the 50 and the 200 day of real motion to the 50 and 200 day on the pure price charts, and we can see the comparison. So it's almost looking at phases, one based on momentum / real motion, one based on purely price. Now, taking a look at the upper chart, it's a simple, this chart here, very, very simple candle price chart. We put 2 or 3 moving averages on it. We like to start with using, for the daily charts, a 50 and a 200-day moving average. And our 50-day is always the blue, and the green is always the longer term 200-day moving average. And then what we like to use is 2 standard deviations as well. And so the second chart, or the bottom chart, is the real motion indicator, and it's set up in a similar way, right? We have the 50-day of real motion, which is the blue. The green here is the 200-day of real motion, and we have the Bollinger Bands, right, which is set to the 50-day of the real motion on this particular chart. And of course, what we also have is the brown dots, which is the actual ratio. So what we can do here is compare, right, the market phase, which is looking at the key moving averages of price versus momentum. Okay? Now, let's move on. So the key relationships in the data, right? So I sort of covered some of it, but what I want to do is just review that once again. So in terms of the key relationships, we're looking at the current reading of the real motion versus the 2 moving averages and the baseline, right? We also are looking at the slope of the 2 real motion moving averages and its relationship to one another. This is very, very similar to looking at moving averages on a price chart. Same concept, except instead of it being on pure price, we're using our real motion indicator as well. So the thing you want to ask yourself, which is bullet point 3, what's the current reading of the current real motion indicator versus the 2 market phases, or the 2 moving averages, which determines the phase. And the other thing you want to take a look at is understanding, has the real motion indicator respected the baseline? So is the real motion indicators trading above the baseline, beneath it, right? And the other thing, right, of course, is we want to see the slope, the overall trend as well. And so the idea is to look at the relationship of indicators to each other, the underlying price chart, and their moving averages. Now, in terms of the Bollinger Bands, we set them up on both the real motion and the price chart. And what we're doing is we're looking for real extremes. So on the Bollinger Bands, the way we have them set is we're using 20 periods and 2 standard deviations. That's our core settings. And so the questions we're going to ask ourselves regarding the Bollinger Bands, are the bands expanded? In other words, are they wide or narrow? The other thing you want to find is the price near a band or not. So either it's touching an upper band or a lower band, or just it's not in play at all. Now, the key thing here, if the price has exceeded outside the band, right? This is the price chart. It should continue to trend, and corrections should hold the midline. It's also, right, in terms of these bands, used to quantify compression. So if the bands are narrowed, right, that's telling you compression. And that's important to know, because compression on the Bollinger Bands in both real motion and price is important, right? Markets are either in expansion or compression mode, and compression leads to expansion. We want to identify that. Also, the other thing to note is if the either the price and the real motion on Bollinger Bands is outside the outer bands at the same time, that's important as well. So one thing that's great about our real motion indicators is they work in various time frames. Obviously, the way we like to use it, we use a 10 and a 50-day of real motion, and we also like to use a 50 with a 200-day of real motion as well. So it's 2 separate indicators that can be used. One is a shorter term reading, one is a longer term reading, and obviously longer term really is picking out bigger and longer, more significant trends. But when you're trading within the 50-day, if you're using the 50-day, it's often great at finding mean reversions. So we're looking for the Bollinger Band to be penetrated on the outside of the bands in both price and real motion to tell you that we're in extreme overbought or oversold condition. Now, for really longer term, what I would call position trading, you want to look at a 50-week on real motion, a 200-week, which is about half of an economic cycle, and the 80-month, which is a full economic cycle. So these are all different time frames, gives you a reading and a perspective of what you can look at over those various trading time frames. Okay, so here's a perfect example of looking at the S&P, and this is going back to, let's see here. This is of this year. This is 2020. So one thing you can see, you get a big difference in the reading between these different settings. So over here in this particular setting, the upper chart is looking at the Bollinger Band with a 50 and 200-day setting, right? So you can see right here, this is real motion, right? The blue is the 50-day of real motion. The Bollinger Band is based on that 50-day, right? And the green here is the 200-day of real motion, and the black is the actual baseline. So one of the things you can see here is in February, right, our real motion gauge started to drop under the 200-day of real motion, right, in late February, before this really nasty 40% drop in the market. So it was telling you here that there was a divergence, even though the price was above all the key moving averages, its momentum reading here was negative. You have the same type of situation, but it happened faster with the real motion set at the 50-day. So you can see two different readings, and the breakdown really occurred much earlier on the shorter term one, where the reading was based on the 50 and the 10-day, as opposed to the 50 and the 200. So you can see right here, right, when this is starting to break down, it was starting to fail in early February, or let's say mid-February, as opposed to much later here on the longer term, or the 200-day as the baseline. Okay, so now in this particular chart, we're looking at both a daily up here. We're looking at a monthly chart, completely different reading at the same time. And over here, we've got a different reading as well in terms of the time frame. In this particular case, this is the 50 and the 10 in real motion, right? So we got the 50 and the 10 on the daily, the 200 and the 10 on the daily, and also now a monthly chart. And what's interesting, you can see for the first time in several months, we're actually starting to trade nicely above and about to break out above the recent highs in real motion. Also, what's interesting is that we really held the 50-week of real motion here. So very, very interesting read across the board. So just to review, we talked about a bunch of different primary conditions. So there are 4 conditions that you want to use real motion combined with price. Number 1 is real motion leading price, breaking out faster than the underlying price chart. Number 2 is real motion confirming price. If it's confirming, it's going to give you much better odds to follow the current price trend if it's also breaking out. The other thing is you want to find out, is real motion diverging from price, going in the opposite direction, or not able to make new highs if price is making new highs. And then the other point we want to make is real motion showing compression while price is still moving. So sometimes you get compression in momentum, even though the price seems to be moving, and that requires a different trading strategy as well. And then let's move on. So here's a perfect situation where the real motion indicator down here, you can see was breaking out the 50 over the 200-day, and the actual real motion indicator, right, the last price for each day is above both of those moving averages. And guess what? On the underlying price chart, not the case. So momentum, in this case, doing better than price. And then when you get the breakout over this green here, which is the 200-day in price, that's a confirmed buy signal, right? Momentum leading price, price exhibiting a breakout above a key moving average. We would call this a phase change. And of course, you get an important rally and Faye breaks out. It basically has a nice tear over the next period of time. So that's a perfect example of real motion running ahead, momentum leading price, which often occurs. Okay, let's take a look at another setup that's similar to this conceptually. Using trend lines, that could be done on our real motion. So this is taking a look at gold, and this was back in 2015, which was an important period of time for gold. After a big run-up, you had a pretty nasty sell-off, and was not really clear, but I'll tell you, it became really clear. I put this trend line on our real motion on GLD, and you had a breakout, and that breakout occurred over the 200-day moving average of real motion, well ahead of the price. And then, of course, you got a really nice breakout. So in this case, again, a bit of some leadership, but overall, real motion confirms the price momentum and this important breakout for the first time over the 200-day moving average. You did get a bunch of other breaks here, but in terms of having a really good trend line here, you can see that that really helped identify by using the real motion with the classic, technical indicator or a trend line. And then, of course, the breakout occurs in price. Okay, another great example of momentum breaking out well ahead of price action, right? Or breaking out around the same time. So one of the things you can see here, right, while this is starting to move up through these key moving averages, momentum is already much stronger than the price. Then, of course, you get the breakout and explosion. So again, in this case, you can see that the breakout in real motion above all these key moving averages occurs well before the price, and hence, when you actually do get it in price action, it's the opportunity to follow and buy, right? That's really what you want. And you can see the difference. Over here, you actually broke out above the 200-day moving average, or you tried. Not the case at all, right, in real motion. Only when it does occur is it really important here. That's an important breakout above our 200-day of real motion, that moving average, and of course that breakout well in advance of the actual breakout on the price chart. Okay, here's another example, but in reverse. So we showed you some buys. Now I want to show you a sale here. This is an Apple. So if you take a look at it, look at this. You can see here, right, Apple, look what's happening. You're getting this huge move up in price. Here's your 200-day, here's your 50, and guess what? In terms of the 200-day and the 50-day, in real motion, we've been trading above it all through this period. Finally, look what happens here. The real motion starts to break down under the 50-day moving average, which it hadn't been under for almost a year. Finally, well ahead of the breakdown in price, right? This here, this blue, is that 50-day moving average. Here you get a breakdown. You also, if you notice, as you made new highs in price, barely, the momentum is also starting to wane here. And then ultimately you get the breakdown. And, you get a pretty good 30% breakdown in Apple here from a high just above 30 to a low, you know, um, around 20 or so. Now it's interesting, does hold the 200-day moving average, but nonetheless, it told you Apple on the defensive for, quite some time, and the real motion breaking down well ahead of the market action. So selling the breakdown and selling any weakness or strength where you can fade made a lot of sense in this time frame in here based on that indicator. Okay, so the last chart I want to cover is the Dow Jones, and this is something that occurred just recently. And this is a classic mean reversion trade, and it's really a powerful one because it demonstrates three things. Number one, the power of all three things working at the same time. And when I say three things, first, number one, look at price here, right? Price is classically under the lower Bollinger Band. Now, in terms of real motion, looking with the 200 and the 50-day as the setting, guess what? We're also under the 2 standard deviations on real motion. That is really oversold, right? However, we just don't buy oversold. What we want is a reset, and the first day here, right, which is the first day of November, right, we finally get both price and real motion back into its less than 2 standard deviations on the Bollinger Band. Now that is a reset. That tells you the market hit extremes and is now in positive mode, and you get a monster rally. That is exactly what we're looking for. And remember, mean reversion works best on shorter term time frames. Hence, we're using the Bollinger Bands on real motion with the 50-day as the setting. So this is a very, very powerful setup. And of course, any decent risk management, it would have been impossible not to make a lot of money on this trade. Okay, hope this all helps. The other thing I want to say is next week we're going to cover our other indicator, which is called leadership. Now, back to Mish.
Thank you so much, Keith, for that wonderful tutorial. So now back to me, Mish, and I just want to show you guys how you can purchase and access the ACP plugin. So first, if you go to the home screen on StockCharts and then go to StockCharts ACP, you'll see a chart will come up. Then if you go all the way here to the bottom right and hit See All Plugins, scroll down, here we are. All you have to do is hit the button for See More on the Market Gauge Real Motion. And in my case, of course, you see it's installed. In your case, it will give you some information, a video you can watch, a little bit of information, and then all you have to do is hit the Buy button. Okay, so that's it for now. Look forward to seeing you all soon. Thanks so much.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.